Welcome back, everyone. The Fed's preferred inflation gauge climbs in September as core personal consumption expenditures rise at a 5.1% annual pace, marking a slight slowdown in September from the monthly pace reached in August. So what does this mean for investors as high price pressures remain amid the Fed's fight against inflation? Joining us now, we've got Andy Sieg, who is the Merrill Wealth Management President. Great to have you here in studio with us on this Friday.
Hey, great to be here. Thank you.
Absolutely. Okay, so we should note it was actually month over month. It looks like it was a 0.3% move in September here. And so with all of this considered, food and energy costs, they rose about 0.5%. But what of the Fed's mechanisms that they have started to already roll out in their policy will start to show up in all of these different categories and when?
Well, I mean, starting with the Fed is the right place to start. We're still in the middle of a Fed tightening cycle. We think there's several moves left to go. During this period of tightening, we shouldn't be surprised markets are going to be choppy. So when we think about where we've been this year, this is the worst combination of equity and fixed income markets that investors have literally ever seen. And we think the choppiness is going to continue. I think as for investors, the challenge here is how do we stay focused on a medium and long-term view that makes sense in terms of what you're planning for. Generally, that's retirement or longer-term goals for our clients. On that time horizon, we're very bullish. But on a near-term basis, being balanced, expecting some choppiness is what we're advising clients.
Where do you invest for the medium term?
Well, I think over the medium term, interestingly, many of the things that are in today's news cycle, when you think about technology companies, the digital revolution is not over. So technology over the medium and long term, healthcare, same story, amazing innovations unfolding. When you think about energy, obviously energy consumption is going to continue to move. There's an energy transformation that's underway. And there's opportunities there that really run the gamut from legacy companies to exciting new technologies.
Andy, I'm trying to get sort of a sense of what your clients are telling you. You guys obviously have a huge client base. What's the average net worth of your clients? And are they afraid right now? Are they calling your advisors and saying, I don't know what to do right now. I want to pull some money out. I want to put it in cash. What's the vibe?
Well, the average client at Merrill Lynch is, on the order of $3 million invested with us, but the spectrum is very wide. Our clients range from families just starting out to some of the wealthiest people in the U.S. and around the world. Generally speaking, our clients have been pretty balanced in their view, as I mentioned earlier. We try to work with clients against the backdrop of a medium and long-term plan. So we set asset allocations and have discussions that, hey, we're building this asset allocation so it is resilient when the markets hit us with crosswinds that aren't expected.
I guess what I'm asking is, you come back to them with, please stay balanced
Sure.
and don't freak out. But are you getting some incoming freakouts?
We started to see some more alarmed calls, during the lows earlier this month. But when you think about prior periods, the great financial crisis in 2008, when you go back to the tech crisis back in 2001, we've not seen unsolicited sell orders coming in from clients at a high level. So in many ways, this has been reason has been able to keep emotions in check, despite the kind of action we've seen in the market.
Mm-hmm.
Are there clients, though, the most affluent ones, that are taking money off the table and saying, you know what, we're just going to kind of hold this off to the side for ourselves right now and then re-engage later on when it feels the most comfortable?
What we've seen clients doing in many cases, some of the most sophisticated clients, they have been raising capital. Sometimes they've been doing that actually, through credit facilities. So they've been trying to make sure they have some dry powder, so to speak, to move in and pursue opportunities. And so many of our clients, they either borrow against their securities portfolio or are borrowing in other ways in anticipation of moves going forward. Now that's advice that we deliver on a very individual basis because it revolves entirely around client sophistication, their ability to withstand kind of further drawdowns in the market, and the like.
Now, I do want to mention just briefly a new kind of service that you guys have about matching advisors. And I want to ask that because traditionally in the advisor and management business, there's sort of a hereditary nature to it almost. Like the person who managed your parents' money, particularly if you have some money, is the person who ends up managing your money. But as you said, there's a range here, and there are people who want an advisor who've never had one before. How do you get those people hooked up with somebody?
Great question. When you think about the volatility and the moves we're talking about, this is a bull market for advice. So we see more people seeking financial advice than we've seen perhaps ever. And one of the things that's extraordinary is it seems like access to financial advisors would be widespread, but almost a third of high net worth clients don't have a financial advisor today. And when you dig into that, what they tell you is we find the process of finding a financial advisor to be a little opaque. If you're from a family that perhaps hasn't historically had wealth in your family, you don't have an easy recommendation to a financial advisor. Others find it very intimidating. And so a few weeks ago, we launched something called Merrill Advisor Match, which is designed to make it very transparent and very easy to access a financial advisor. If a prospective client goes to the Advisor Match service, they enter some information about themselves. We've made it very fun and interesting. These are not just straightforward financial questions. A lot of it's your personality. If something breaks in your home, how do you handle that? Do you call an expert, fix it yourself, or look the other way and hope it fixes itself over the next few weeks? And based on what you enter, we match you up with a financial advisor that has similar personality, similar perspective. We're only a few weeks into this. The reaction has been outstanding. In many ways, it's almost creating something like a dating app in the middle of the market for financial advisors. And we think it's solving an age-old problem. And lastly, Merrill Lynch is the firm that took Wall Street to Main Street. There's a lot of people on Main Street, particularly new investors from diverse backgrounds that haven't had access to financial advice. This is democratizing that process of finding a financial advisor. We think it's going to be very well received over time.
Swiping right for financial advice. Andy Sieg, good to see you in person. Merrill Wealth Management President. Good to see you. Have a good weekend.
Thank you.